if single family investors should not, we talked about this with Jason, should not, if you can't find new deals or new transactions, it may be a good time, I feel, to reach out and get involved in some triple net deals, either as an LP investor, or if you have the cash and you're bankable, and you can find the right deal. Like he said, they're taking care of the routine expenses. You're on the hook for capital expenditures, major repairs, but it's a great tax deduction, and it's very,
especially if you're buying a car wash.
That's what I want to. Thank you. That's the best investment there is right now. Like I think hands down. A buddy of mine bought one for like 1.2 million in Iowa.
It's so funny because they were not financeable about 10 years ago.
Right.
And then all of a sudden PE got involved. Mr. Car Wash went public, hit like a 30 to 35% multiple because they realized it was recurring revenue. And all of a sudden the whole world is like, oh, the membership model. These are great.
Yeah.
The rents on a lot of them don't make any sense.
Right.
But I mean, so on a pure real estate perspective, you'll find them. I actually underwrote a portfolio of these car washes in Las Vegas. I got my hands on the financials. I was talking to the owner. Las Vegas. So two things will determine the performance of a car wash: rain and rain on the forecast. Because if it's forecasted to rain this week, you're not going to get your car washed. And your average precipitation was going to depend. So Las Vegas, phenomenal market for car washes. He was saying he wanted to set his rents around $700,000 a year for an acre and a half of land with a car wash on it. Now the equipment itself is expensive, but triple net property, the tenant owns the equipment. Landlord, you don't own that equipment. And they go through it every 3 or 4 years. I saw his cash flow though. His car washes were doing like $3 to $3.5 million. You want to know what his costs are? Soap and water. So like the pure profit that those operators are making on them is insane. Now, to my point earlier, at the end of that lease, if he's doing $700,000 a year, who are you going to get to replace that lease with, that rent with? If he doesn't stay, there's no way you're gonna replace that rent.
Well, also, and I don't know that market, but 700,000 seems incredidly high.
Yeah.
For that, so
yeah.
If that guy's doing well, he could be like, "Well, I'll just go buy and develop my own."
Well, he was developing it, and he's like, and now he's like, I've got these 6, 7. He's got like 50 of them now, but this was like 4 years ago. He's like, I've got these 6, 7 pieces of real estate. I'm looking at cap rates. I'm looking at the rents that I could set. I can get a 3 or 4 rent coverage ratio, meaning he could pay his rent with his profit 3 or 4 times. He's making that much money. At like $600,000-$700,000 a year in rent. So it made sense for him to do it. It's a safe enough play for as a landlord of like, yeah, he's gonna be profitable there. But from a pure real estate perspective play of like, what's the market rent? Is this market rent replaceable if this tenant ever left? On a per square foot basis, it was something like $150 a foot. For in triple nets, that's probably 5 or 6 times the market rate.
But my point though is, at some point, is there a little price gouginess to that? But I guess it's the market. There's always gonna be somebody to pay, and if nobody pays, then he's got to lower the rent.
Yeah. That's the beautiful thing about being in business purpose transactions. There's no such thing as price gouging.
Yeah.
That's why I don't loan to people. I only loan to companies.
It's all negotiable. I mean, the buyer is going to do their diligence, and they should. If you're not buying from a corporation, that's another warning for triple net leases. Just because it says corporate lease doesn't mean it's corporate lease. If it's a franchise on that lease, get your hands on those financials. Understand how they're doing. That's where you need some sophistication. A good broker will lead you astray from those kind of pitfalls. Some people, this happened with Carl's Jr. Carl Karcher, founder of Carl's Jr. His grandkids inherited a franchise. They weren't doing so good around 2006, 2007. So they decided to sell the real estate. They sold a bunch of the real estate for probably twice what the rents should have been set at, but they needed the cash. So, high rent, price is dictated off of a percentage of the rent. So the higher the rent, the higher the price. So they sold probably 10, 15 pieces of real estate for crazy high prices. 2 years later, declared bankruptcy. Can't pay the rents. As a landlord, your lease is now worthless. Class action lawsuit, they ended up getting theirs in the end, but that's just a cautionary tale of just because you have a 10, 15-year lease, if you're with a 2-unit car wash operator paying $500,000 a year in rent, you better make sure he's good for that $500,000 a year in rent, unless you want to go operate a car wash.
I mean, it sounds like you should.
I mean, based on the numbers on them, I would love to be operating car washes.
Yeah, well, owning and operating, not just operating.
Yeah, I don't want to be sitting. I don't think.
Especially in Texas.
I don't think you'd be
I
don't think you'd be a good towel boy.
Hey, you don't know.
Stop.
Okay.